Well, hello and welcome to the Diary of a Successful Investor. And when I talk about investors, I'm not just talking about investing in stocks, investing in gold, investing in bonds. You could be investing in a business or property or even in yourself. The bottom line is the people who sacrifice money and time to invest invariably get a return on their investment. And I want to talk to a guy. He's clearly invested a lot of his time in building a business called Fairmont Equities. And there are a lot of investors who rely on the kinds of things he can see in those crazy squiggly lines, which determine him or make him be called a chartist. Mate, thanks for giving this. Thanks, Peter. How long have you been in the charting game for?
I mean, I started Fairmont Equities maybe 13 years ago now.
Yeah.
So the business has been running for a while. Charting only really a few years or so earlier than that. It's something that I've developed over time. It's not, early in my career, I didn't know anything about charting.
During your early parts, you
Well, I guess, I mean, the first sort of big job I had was with Quarry Bank, or the GFC, working in their structured products division, dealing with structured products and warrants, all those sorts of things. Your fingertips, you had all this great Macquarie fundamental research, and that's the way I thought it was done. You do all this research.
were you a maths nerd at school?
Yeah, I was. I was very good.
I knew it.
I was very good at maths, and I studied engineering in university as well as commerce. Or one of those 17-year-olds that didn't know what to do with. So I did both of it. I keep both of them back and
Yeah.
see
Where
what
are you university? UNSW? Or
Sydney University.
Sydney?
Yeah, so I've always been good with numbers and recognizing patterns and all those things.
So Macquarie must have thought you were smart because in those days they were not hiring dummies.
Yeah, they clearly thought I was smart, but then the GFC came along and they had to cut people. So that's when I moved on and discovered China.
It's funny you should talk about GFC because not long before the GFC, we used to publish a magazine for the Institute of Chartered Accountants. And Alan Moss, who was your CEO at the time, he was a chartered accountant and was seen as a celebrated one because like Macquarie has been a fantastic business. So we did the cover story on Alan. I went to Macquarie and I interviewed him. And he taught me a lot about what really great investors do. He confessed that I said, What do you do every day when you come to work?" He said, "I'm given a report of where Macquarie Bank's financial position would be if Wall Street dropped by 10%, 20%, 30%, 40%, and it went to 60%." And I thought, that is staggering. Now, of course, he retired before the GFC, before the market dropped 50%. So he obviously, well, I don't know if he picked it, but certainly getting that kind of information, I thought was quite staggering that someone who's very good at investing wants to get, his position on a daily basis.
Well, I mean, that has a lot of parallels with trading. I mean, because the way to approach before you open a position, you don't think about the dollars and how much you're going to make from it. It's how much will I lose if I get this wrong? And I guess that's similar thinking, and how much could I lose today
Yeah.
if things don't work out? So yeah, interesting that yes, it was coming from the other side of that.
What drew you to investing in the first place?
Well, we all like to make money, don't we? So
Yeah, I give on it, but it's a majority of people in the, yeah.
yeah, but I mean, making money for clients and um, just a very interesting world. Um, yeah, I mean,
You always go through, I know car racing give you a thrill.
yeah,
It's making money, getting, making a call, seeing it spike. They give you a bit of a, oh, I love it, dread it. Hey, yeah.
you have to love it. I mean, doesn't it look at, hey, I'm looking at my positions for clients and, my gold ETF's up 3.5% and the market's up 0.7 and my silver ETF's up 4% and I love that. That's great. I'm looking at the client accounts and having a look at what the market's doing and you get a real kick out of it.
How do you cope with negative periods?
Um, yeah, look, I mean, you get that a lot. I mean, where you're investing in a range of stocks, there'll be ones that you lose money. There'll be people that are unhappy. I guess you just break it down into all those things you can control and there's things that you can't. And if you can control something, what can I fix for next time? But
Are you good at selling? You know, when something you thought would do well, it's gone 3 months or 6 months, and it's not going anywhere. Are you good at accepting or maybe wrong temporarily?
yeah, yeah. And how about that's and that's something that you develop over time. We're all human, and you want to hold on to that dog maybe one more day, just in case it bounces back. But look, it's like anything in life. You don't need to muster up a huge amount of sort of motivation to get something done. If you could break it down into, small little sort of achievable, bite-sized, actions. And, when it comes to selling, again, it comes back to, and this is, a lot of this has to do with charting and trading. Before you buy something, if you have a stop level, it takes that emotion out of it. So, yeah, I don't need to sit here and get all this willpower to sell something because I think it's going wrong. Because by you coming into today, that if this stock was going to trade under this number, then that was going to be my cutoff. So it just takes away that, a lot of that emotion.
I know when I'm talking to you for the TV show, you'll often come up with the word, it's great to stop. Explain to people how you use stops in your own personal investing and also for your clients.
Yeah, so it's essentially just a level. Try to keep things. I try to keep things as simple as possible, and that's the great thing about charting because it gives you this extra filter to know whether to get in or out of something, and it especially helps when to get out of something. So a stop is essentially a level with that. Yeah, if it trades under this, I'm going to get out. How you determine that depends on the individual. It might be a moving average. It might be previous low point. It might be a break even.
Or a simple percent, or a 10%.
So exactly, or a simple percent, whatever works for you. But as long as you can have that number and you're consistent, and there might be the odd day where you fight, you do the wrong thing. But if you could be consistent over 90% of the time, then it really does help. So that's all a stop is. So, and the trailing stop is essentially a stop that moves up with your stop.
For people who've never done this before, do online brokers provide opportunities to stops?
Yeah, so a lot of online brokers allow you to put these in. The problem with that is the market can move around and be quite volatile, so you won't get stopped out in the morning only for it to bounce.
So do you use an actual physical broker to do it for your stocks?
No, I just monitor the levels myself, and I usually and you take the action. I use a bit of common sense around it. So I might be just under a stop level, that a stock might sort of stabilize for a day or two, had a rough day on the market, and if it bounces back up, then all is okay. But I feel I can do that because I feel I've got to a stage where I'm not going to let it spiral into a 10% loss is only 30 to a 20% loss.
Yeah. I'm just thinking, were you in CSL where it has big drop recently, and did you have stops there for CSLs?
Yeah, that's an interesting one. So I was in CSL, and that was a situation where it gapped well under the stock.
Surprisingly, it's just not a stock that I never thought about it. Again, clear I've copped a loss. I'm hanging in there 'cause, I like the stock. But how long did it take you to realize you had to get out? Or no, it always may stay in.
No, I'm in CSL. So with stop losses, they're not perfect.
Right.
So you will get situation where it might gap under a stop loss. So what I mean by that is it's not as though it's slowly come down into your stock level and you can sell it. It moves quite a bit distance below it. And then you need to make a judgment call based obviously on experience done. Then the stock fundamentals as well. Do I need to stay in this or do I take a bigger loss than what I first factored in? And with CSL, we weighed it up. We thought, well, if we give ourselves a certain time horizon, we'll get our money back on it. So that way.
Yeah, and now it looks like the buys. Yeah, you can make money on its upside if you die across the average. How How do you evaluate the thing? You know, there's this question I never ask you. I'd ask you, what you think at the moment, what the charts say. But how do you evaluate when you want to buy something or sell something?
Yeah, look, most of the time we start off, I guess, from the higher level sort of macro point of view, what areas of the market, given everything else, should do well.
Yeah. At the moment, you're thinking, oh, the uranium.
Yeah,
Feel like those two sectors.
and then you narrow it down. Um, so with what we do is, I talk about charts a lot. We do combine the charting and the fundamentals. So yeah, I look at the areas I want to be involved in, then I narrow it down to strongest companies. And then of course I look at the chart to see if it's the right time to get in. But sometimes it happens the other way where you see a chart that looks really good. It just doesn't make sense that you should be involved in this area. And then that might set me off into doing more research.
But yeah, so when you see that, do you someone think this could be being bought by smarties who know more than the market? We know it's against the law, but we also know people do know what's
Mm.
going on. Um, can you think of one investment where you saw that and there was no external information to make you really want to buy this apart from the maybe it'd been sold off and it was doing really well, but there was nothing out there to make you think that? Is it one you remember?
Oh, look, I'm sure there have been plenty. I mean, in terms of the last few months, some of these lithium names, I mean, you can make an argument of, oh, yeah, look, it's oversold and blah, blah, blah. But on balance, it's a tough sector.
Yeah.
I think it's still a bit opaque as to what's happening with lithium supply and demand. But the charts were moving up before we had the mine closure in China, the CATL mine closure. Yeah, there was, the Simone money was.
Yeah, do you think there could be Chinese people who knew they had a mining problem developing, who might have thought, maybe we should be buying our rivals? This could be a good. But that's logical, isn't it? It's against the law to do that with that knowledge. That I don't think the ASIC will be suing anyone in China.
Well, it could just also be, if you have a look at, say, mineral resources,
Yeah.
it could just be as simple as, here's a business. If you think back 3 months ago, just you could come up with a shopping list of problems.
So, right. Checks off the Thaddeus found the virus falling apart. That's right. Everything's going. Most 40 pages.
So, people out there smarter than me have done the numbers and just figured this, this thing is.
It's bad, but it's not that bad.
That's right. And the good thing about, um, commodity stocks, it's not like other businesses that might just go to war. So a lot of these resource companies, the reason why they're down is just because of the commodity price. And it just really depends what assumptions, what commodity number you plug in there. Usually at the bottom, all the analysts are quite bearish, and they always seem expensive, but very really cheap when they're very sort of topped out. So yeah, mineral resources is a classic.
That's exam. Books that you've read or market thinkers that have had a big influence on you.
Oh, look, I mean, I've read a lot.
You're a mathematician, you probably had to read. Yeah, that's right. Yeah, sorry.
No, look, I mean, I don't have a name that sticks out, but I think a common theme for a lot of the good books is, whatever strategy you have is you just need to be consistent with it. So, the way I approach things where I combine charity and the fundamentals, that's not for everyone. But yeah, I just try to be as consistent as possible with, when I get into a stock, what I'm looking at on the chart, where I have my stop levels. And that consistency over time gets me a return. And it might be the same return as someone who's a deep value investor and doesn't know anything about charts, but they're really good at what they do. They're just consistent. So I think that's the common thing with me.
Has there been a time when you've invested in a company purely or primarily because the CEO you thought was very impressive and was going to lead this company to higher levels? I'm figuring if you lived in America, Warren Buffett might have been the billionaire that Berkshire Hathaway purely because of its great track record. Have you ever been influenced that way?
I I don't recall a situation recently, to be honest. Maybe in the early days, maybe when I was still, in my early 20s, and you just, before the dip through there, and, I have nothing bad to say about Quarry when I worked there. But, when I was there, I was in my early 20s and see all this amazing research and you hear from those amazing CEOs. So I might have been enticed into the story, but
What
now,
investment story?
yeah, there's a lot of pre-investment stories about the GFC there. But now that I look at the charts and I guess I've got a few more years of experience now, they might spin a story, but we know they're always going to spin a its head.
Yeah, no, I guess history might recall that that comment was a really good selection because that Dana Murray was quite a famous one. And I think they had a run of not quite as good CEOs, but I think when CBA's share price hit 190, Matt, there was a little bit of involvement in that. But it is, I think even Buffett says, the caliber of management is one of the characteristics you should look at when you are going to invest in a company.
Yeah, I mean, it's hugely important, that's for sure.
Most partners are case in point.
Yeah, yeah, but yeah, I don't think I'd invest just because of who's running it. Yeah, all the other pieces need to fall in.
I swear, what Jerry Harvey be very disappointed about. I guess he actually blames Katie, his wife, for that company doing well. Okay, we're assessing a company or a fund. What tells you that people are worth banging?
Look, I suppose the track record counts for something as well. But um, I just think you just need to be in the right sector at the right time as well. So there are a lot of businesses out there which if it's just not happening for you at the moment, I guess our resources is a great example because that is a very cyclical business. Yep. And you could be the best CEO, but if the lottery price is in the wrong way, or you could be Jerry Harvey. And he's had periods where his share price has gone down, and it's just because interest rates are going up and no one has any money. So there's so much you can do, but at least you then know, okay, this guy's great. He's doing a great job. Now it's not the right time to buy actually.
Yeah. Do you often use buy the dip strategy and you look at the history and you make the judgment call? There's been insufficient major order changes to turn that history around.
Oh, look, in terms of buy the dip, it's more a dip within an uptrend. So if there's something that's in a longer term downtrend, I just stay away from that. Um,
You are risk averse.
yeah, look, I mean, especially because I'm managing clients' money, you need to be, sort of extra careful. I mean, even just my own personal investing, that yeah, I, I might try to get in a bit earlier and might take a bit more risk, but um, look, it doesn't have to wait for that uptrend to get established because we've seen some of the great stocks and moves they can make. It doesn't matter if you miss the first 10 or 20%.
Sure. On a rising trend. I've asked you about investing because you're good people. Have you ever not invested in it because you're worried about the people? Or have you actually liked the company, and then had question marks over the people? And I think I'm thinking about WiseTech. WiseTech is a great company. That occasionally its founder gets question marks and there are issues. Had that either stopped you or you thought it an opportunity because to something essentially a good company?
No, that is a good question because WiseTech was an example recently where look, we're in it now, but there was a period of time that we just stayed away because I was just worried I'd buy it. And then I'd read
You announced
the next morning in the paper that there's something else going on. Um, but then I guess you sort of switch modes and you think, okay, well, if there's this much risk out there, I need to wait for it to maybe get down to really cheap levels. And then if it bounces from a really cheap level, I've got maybe more of a buffer to buy something that's already run pretty hard with all these other sort of management issues in the background. So,
how do you separate the noise from signals in volatile markets?
look, I think the charting is good at at doing that. There is a lot of noise out there, but if you could, I think one of the mistakes I made early in my early days was, I've got the charting, I've got the fundamentals, and it's just trying to figure out which should be the that sort of final filter to say yay or nay whether to do something. Yeah. And I've realized and the results have sort of improved dramatically. Just if I use the charting with that final filter, um, then that's said we go. So whether it's entering a stock or even exiting, everyone might love it. But if the chart's saying no or it's going quick stop, that's what
Yeah, and oh yeah, so that's what I use you for. I don't want to do charting. I look at a chart, but I'm not an expert at all. But I always like it when you reinforce a view that all the other reasons I want to buy. That's why I have you on the show. Personal investment reasons. So, what's a belief you hold about investing that many people might disagree with? Some people do right tongue, that's rubbish.
Yeah, look, I guess with your charting, if you're following the trend, it means that you're following the flow of money, and that goes against a lot of people's instinct to maybe try to be contrarian or think that they're finding an opportunity that no one else has found, whether they genuinely believe that or they've got maybe an ego in that and they want to prove that they get smarter than the rest of the market. But I guess I've realized over time that maybe I might be smarter than the market, but if all the money in the market's going in that direction, I can't force it the other way just because I think I'm smarter. So there's a flow of money. That's CBA, great example. So how long have the analysts been negative on the share price of CBA up until recently was CBA shareholders because the flow of money that's where it was going.
It's worse than that, wasn't it? Yeah. Were you putting stops on it as it went up?
Yeah, and then we got stopped out. When was it? I think it was the Y.
Got 170 or something.
It wasn't the exact top. It was somewhere above where we are now. But and then we've moved on into other areas. So since July, we've been getting more and more aggressive into the resources space. So yeah, um, sort of earlier years we may have had some exposure to say BHP and some gold, but now there's quite a few resource exposures in our portfolios. So there's been quite a bit of rotation happening in the last few months.
Why do you think resources will do well?
Oh, look, I mean, with gold, there's a few sort of peculiarities as to why that's doing well, but with resources in general, yeah, it's the same story as it's been for 100 years. It's very cyclical because of um, the way supply, I guess, changes over time. So what I mean by that is, you get high prices in a commodity, a lot of supply comes on, that kills the high prices, and then the price doesn't recover until you get rid of that supply. So you've got this sort of ebbing and flowing of supply. Yeah. And with most resources, we've had this very long period, potentially a decade, where there has been a lot of underinvestment in resources, whether it's oil, whether it's uranium, lithium. Lithium's had that sort of classic sort of situation where there was not enough supply, price shot up, all these little miners turned up with their mines, high cost mines, and then they've had to close, and that's why you'll get the rebound. So it's just that cycle, and we're just in that part of the cycle now where I think people are realizing that um, there just hasn't been enough investment because a lot of money's been chasing tech over the past 70 years. And there just hasn't been enough investment in mine supply. And we're starting to realize that. And I think 2026 will be a very exciting with the commodities.
Yeah, great. I'm long commodities. I'm happy about you saying that. Finally, I will finish and ask you what is your favourite play right now. But the mindset shift you would recommend for someone wanting to be better at investing. So I guess what I'm saying is, what is the prime mistake people make about investing, and what would you recommend they do to get rid of that mistake?
I suppose people try to front run what's happening at the moment. They try to, you do need to forecast, but it's very easy to say, okay, well, the market's gone up what feels like a lot. So therefore, yeah, we're in a bubble, but whatever sector's doing well at the moment. So I'm going to short the market now and try to position ahead of that. And I think that's where a lot of people get unstuck. So you really do need to stick with the market to an extent, whether you like it or not. At I think when it comes to trying to pick the extreme points, it's easier where the market gets sold off. Like April this year is a classic example where you could start to think, okay, well now it's time to get long down here because we've had this extreme event. But the market on the way up, as they say, takes the stairs on the way up, the elevator on the way down. So as it's at the moment, it's just creeping up, creeping up. If you want to now short the market or sell everything here, that's a big call to make. But most of the time you'll get wrong, and then you're missing out on all these gains. So I think you just need to stick with it to an extent. And there's a lot of noise out there. How do you pick the top? Keep it as simple as possible. So what we do is, again, look at the chart, just look at the moving average. If you're above this moving average, I'm long. If I'm under it, I'm out. Just try to keep it as simple as possible so you don't get yourself all caught up in a knot trying to figure out whether you need to be selling something.
Final question. What do you like now and why?
Well, I like three things now.
So I choose the upper
Look, our best. So for our clients, we've got via ETFs exposure in gold, silver, and UAE. So they all with
Very different ETFs.
three different ETFs.
Yeah.
They're our top three performers at the moment. And, very excited about where it's heading. Gold started moving in March last year. It's got a lot more upside. So you've still got money being printed like there's no tomorrow. It's US debt staring up. The dollar's just dropping because of everything that's going on. Central banks buying gold. So these
Rates are falling.
interest rates are falling. A central bank in the US that's kind of walking away from what inflation is doing, is concentrating on employment and the economy. So inflation might be an issue next year. That's positive for gold. So you don't get these bull markets in gold very often. You might go through a decade of nothing, and then suddenly all the ingredients are there for gold to rally, and of course silver follows. And uranium, I've spoken about before on the show. That's a classic supply and demand mismatch that I've never seen a mismatch like this before. And there's only one way to resolve that, and that's through much higher prices. So I'm really excited about those three sectors.
Best stuff. Well, I'm very excited you've shared your insights. This is a sort of, we've been hanging out together quite some time. We always sit within stocks, but it's been great to catch up to see what's been going on in that mathematical head of yours. Thanks for coming on, Gary. Mike Gable from Fairmont Equities.